value gap is where price has moved too fast from a high or low of a wick of a candle still here. From this wick here to this wick here, it's created a fair value gap.
Okay.
And that's where price has moved too fast from this point, and there's been no retracement of price. It's just kind of fell through on itself. So that means that buyers or sellers are waiting to be filled, haven't had the opportunity to. So we've discussed how this fair value gap was indicated by the green box act as a magnet. So price can come and retest, and you can see here that you've come down on the 2 down, and the next 3 candle, it's actually come back up and retested it into that area. Yeah.
Yep.
So it's kind of TTO'd on itself. It's come down, it's retested to try and get those people who are waiting to be filled, and then on the next candle, again, this is the weekly chart, it's fell through itself again. But in the future, this can act as a target. Now, this is actually pretty interesting because this yellow line here is the point of control volume line. So we know at some point as well that can also act as a magnet. So if this latest 2-up week continues upwards, you're going to target the fair value gap plus the main point where volumes being traded.
Okay. How did you get that main point of volume?
So I actually got it from Ray, and it's on the volume profile indicator. All I did was deselect every single option because the screen got too cluttered, and then I just selected the PLC. So so it's called PVP 30 bar up and down, and if I click on that, you can see if I reselect these items, okay, here. So these were all selected by default, and then I've deselected these and just had your PLC.
Okay.
So if I go ahead and press OK, you see how it gets it's a bit hectic there now.
Yeah.
There's a bit too much going on. So I just deselected all those and just had the point of control. And again, the point of control is just the most traded volume price. So you can kind of see where price has been traded the most. So yeah, that's a fair value gap on the weekly chart of SPY. And if we come across to this side, the daily, there's another fair value gap. So it's from the top of this wick here to the bottom of that wick there, which is created this green box. And it's where price has gone from 2 up to a continuation, and it's just gone too fast on itself. 2 up, there's been no retracement of price.
Okay.
So on a smaller time frame, you would see that. On a smaller time frame, you would see either a Broadway formation or a TTO or something. But in this occasion, it's just literally show up on itself. Yeah?
Yep. Okay.
So the green box is the fair value gap, and this box here, this kind of plum-coloured box, that's where it's been partially filled. So once the fair value gap has filled and all those orders have been executed, once it's a partial fill, it goes to this plum colour, and then once it's been filled completely, that box will disappear and you won't be able to see it anymore.
Gotcha. I saw that with snow, actually.
Yeah. So we know if for example, SPY was to come back down in itself and reverse back down, you could use this as a target for future reference.
Okay. Now, there wouldn't be a fair value gap on those last 3 daily bars because price moves so fast, or is it because the wicks?
There might have been, but once it's filled, it disappears from the chart, you see. So if it's already been filled.
Okay.
So.
Gotcha.
I understand what you're saying. It's just because when you have a fair value gap, it's got to go from the high of one wick to the low of another wick, and because there's no low of another wick here, there's no fair value gap. Yeah.
Okay, I get it. Okay.
Let's see if we can find it more. Well, I think they would have I would have gone by now. Sometimes, like here, you can scroll back in history and you can see one there. So if I just make that bigger. So when this 2-3-2 happened, so you had a 2 up, 2 failed into a 3, and then prices come down too fast on itself. And then you've got the low of this candle, high of this candle, which is creating your fair value gap. But there has to be 2 points of reference.
Okay.
The reason why there's not one here is because prices didn't stop here. If prices stopped here, it would be the high of this candle to the low of that candle. It carries through on itself.
Okay. I think I'm getting that.
Yeah, and then again, this can be a point of reference in the future. So if we scroll across, what's that, like 440s, give or take?
Mm-hmm.
So we know if we come across now, you might say, okay, in the future, once I get above the high of your 416s, you could be looking at this as a potential target, which again comes in
top of that broad information.
The top of the broad information, yeah.
Mm-hmm.
So
okay.
value gap.
I like that.
I think again, I'm still kind of learning it myself, but I think that's the explanation I can give you where price moves too fast and it has to come back to retest that price to get those bills executed. That's how I understand it.
Okay. I know that's only a small part of the whole ICT thing, but
yeah, it's just a spot. Yeah.
But that's good. It's a good way to start.
Yeah, and this indicator, for those who are wondering, it is called ANCHE. And ANCHE, ANCHE /FVG for fair value gap. It's on your trading view indicators. And I mean, I've picked my colours. I don't know what it is by default, but for me, the fair value gap's green, and then partially mitigated is the plum colour. You can make it wide if you want. You can make it extended, or you can just have it where it's just a box. So just have a play around with it and see what suits you. But yeah, that's the indicator there. ANCHE /FVG.
Awesome. Thank you.
No
Thank
worries.
you. Can you
Go
ahead?
Go ahead. No, I was going to say you played around with it, so how have you found it?
Well, I was gonna say with snow. Could you look at snow?
Yeah, commercial.
Because I think if I had known this a week ago, I could have played snow. I mean, I could have played snow both ways anyway. But if I had known this, I definitely would have played that bounce because I saw it
so
fail.
do you want me to go on the weekly chart or the daily?
The daily. Okay, so actually on the weekly it's still not quite filled.
Yeah. So again, you have your fair value gap here, so it's gone from the high of this candle to the low of that candle, and you can see prices just shot straight through itself in the week. So now you have this 2 down the latest week, even though it's a hammer. If price does come back through itself and we get a 2 down, you target in this area, which would again be the low of this candle as your target one.
Got it. Now, why wouldn't it be like the low of that green area? Because
it probably would be, but at the moment it's only partially filled up these highs. So once this purple colour then disappears, it'll then target this green box, and that will turn purple, and then that will disappear.
Okay, and then once it's at the end, like once it completely disappears, I mean, you almost at the target by then anyway.
Exactly,
but it could definitely still reverse because they're filled, right? Isn't that the mechanics of that?
That's it. Yeah. I mean, if you're not clear on this hammer candle, obviously the long wick has come down, and that's where you see it's been partially filled, and it's come back on itself. So that's the reason why it's only partially and not fully. Whereas if you had a solid red candle down, then you would see it be filled completely. But looking at this broadening information, it looks like we just TT'd and we're just going to go back on ourselves, especially with the hammer, which is obviously an actionable signal. And for snow as well, if we get a 2-2 reversal next week, then we're targeting your 160. What's that? 160, 130. Yeah.
My eyes are bad, so yes.
Yeah. I mean, it's interesting because if we move across to the daily chart here, we have the EMA clouds, and the black line is the 9 EMA, and the white thinner line is the 21. I know you play the 8 and the 20, very similar.
Yep.
And you've got your bullish cross there, so the 9's about to cross the 21. Price has closed above the 9, so we're looking like the last price traded was 149.91. We're looking like we're going to get a 2-2 continuation into next week, targeting your 161.3.
Yes, I like that.
High. Yeah.
Now, when I was looking at it, I could have sworn there was some fair value gaps above. I see, like, I guess.
There you go.
Oh, there they are.
Yeah. So, can you see how it's showing on your daily chart, but it's not showing on your weekly chart?
Well, it is kind of showing, isn't it? Like, is that little sliver?
Is
that it? Yeah. Oh.
No, that's one of my target lines.
Oh, okay.
So I'll take that out. Yeah, so these are just previous target lines, my green lines. But this here, let's if we go across. So can you see again how prices fell through itself here on the 212 reversal down?
Yes.
So it's from the lower of this candle where the high of the box starts, comes down in itself, and it's the high of this candle here.
Wow. Okay.
Yeah.
So basically, when you have 3 candles and there's a big gap in between 2 of them, basically.
Yeah. Yeah.
Okay.
In fact, that's a good observation. I remember Sarah saying to think of it as not like a sandwich, but three parts to it, and the middle part is the one where the fair value gap occurs. So you have to have 2 outer candles, and then the middle candle is the fair value gap. Or think of it like a sandwich filling.
Okay. I like thinking about it like that. That's a good idea. Yeah, that works. The sandwich. So I'm looking for 3 candles.
3 candles, yeah.
Got it.
Sorry, I forgot to mention that, yeah.
Okay, so now I see on the weekly the 3.
Yeah, you see on the weekly, don't you? Yeah. So on the weekly, yeah, you've got your 3 candles. So you've got candle number 1, candle number 2, candle number 3. And again, that wouldn't be, say, a fair value gap here because price hasn't, moved too fast. Yeah, it has to move fast within the 2 candles.
Right.
Yeah.
Yep. Okay, I got it.
I mean, if you're going to do a swing, you could say, you know what, I'm going to swing this until it hits your 202 mark and then take your profit around there. So, I mean, that coincides with this here. You can see the fair value gap there, which coincides with this.
Oh, so that is one.
Yeah, it is one, yeah.
Okay.
Yeah. And again, it's the high of this particular week, so it's going to be a pivot target anyway.
All right, I see it. I think I'm getting the eye for it, of seeing the lows between the wicks on the 3 candles.
Yeah. And because in this particular one, there's the bottom of that candle to the high of that candle. You've got your dead tiny.
Right.
You gap in there.
That's why it's a sliver. But on the daily, it looks bigger.
That's it, yeah. On the daily, it's bigger. And my cursor is the same on the right screen as it is on the left. The move is exactly the same, so that's very easy.
You said the what is the same?
My mouse cursor.
Oh.
So my crosshairs, yeah, it's exactly the same on the week as it is the day. So wherever I move it goes to the same. It
goes to the okay.
Yeah.
Can you look at Wynn? WYNN?
Yeah, of course.
My indicators are not.
Good morning, you. I just joined you.
Hey, Shay.
Hi.
Hey. So this is one on Win. You've got one in the daily, which is where's that? So you've got your 3 candles again, Lala. You have it's fail 2 up, 3 candle, and then you're 2 down. Again, as you can see, the middle candles come down too fast on itself to create the fair value gap.
Okay, I see the sandwich. I see. Yep, I see it with the wicks. I'm definitely trying to look at it without even seeing the green. But yeah, I like that.
I think what you should try and do over time is just try and train your eye and try and find them. Turn the indicator off and see if you can see them yourself.
Right. Right. That's a good idea. Oh, okay.
I mean, the indicator obviously just helps, but once you kind of go that step further, then you can train your eye to see it.
Okay.
So,
I'm looking on the left on the weekly, and I see the 3, but then I see where it got filled, and that's why I don't see the fair value gap.
Exactly. Yeah.
Okay. Okay.
I mean, so again, so that is question. It's not related to a pivot high, I don't think. I mean, if it was to break the high of this 3 in the weekly chart, which is 17109, which is around here, and you could be again aiming for this section to know it's going to reach your 77s.
Okay.
Yeah, that makes sense.
Yeah, it does. I know when it's an inside month with a hammer, so and it looks like I think it's a pivot machine gun on the month. 2, 3, 4, 5.
This one here. Yeah, kind of the monthly chart.
Yeah, I was on the monthly. I think 1, 2, 3, 4, 5. Yeah, it's a PMG on the month.
Yeah, it is. Yeah. 1, 2, 3, 4, 5, 5 lower highs. Yeah. So if we break the high of this last month, we go 2, 1, 2 up, and you're targeting
What's that, 76?
620s, yeah.
So yeah, okay. I see how I can do that. If it didn't reject that 8, it could try to go for that fair value gap. I like that hammer, inside month and a hammer, at the bottom of a downtrend. So
exactly, yeah, that looks good. I mean, the last traded price was 63.48. So if it opens up a bounce, then you know you're gonna get your actionable signal. To take you back up on that PMG. That's good.
I normally don't even play those, but I was just, really liking that range.
Like I said, it looks good. Is there any more questions on the fair value gap, or do you want me to go over the analyze tab?
Well, I actually want you to look at one more just for this fair value gap. W.
Okay.
W's been moving really well, and it's kind of like the same thing on the monthly. It's fallen a lot, but on the month, I'm showing a lot of fair value gaps. So.
Oh yeah, I see that. Sorry, let's look at the month.
And then again, it's not a hammer, but it is the inside, a green inside bar at the bottom of a downtrend. So even if it reverses up to that 8, it still could be a good play. And I'm seeing a lot of gaps above.
Let me just look at the macro chart for this one moment. So you've got your 12 months W. So it's a 2 down.
I think it's an actual 3-1-2. So, and it didn't finish, but
It looks like a 3-2-2.
Oh, 3-2-2. Okay.
This is on the year, yeah. So 3-2 up, 2 down. Now, I would say it's still going to try and, well, you'd want it to try and get to the low of this 3, which is 2170. So there is that, but can you see again? You've got your yellow line where the price has been traded the most. So if we go to a quarterly chart, again, you've got your inside month with all these fair value gaps in the quarter, but the 9's about to cross below the 21 here, which indicates in the quarter that it's going to keep continuing down. I mean, we don't know for certain, but there is a lot of inside actionable signals on month and a quarter. So on the weekly you've got a hammer. So but it's kind of just been consolidating, hasn't it? So I would like to see above 65.31 for a break above. Do you see how we got like this box here for Strat?
Now, I wonder why
you got kind of like this box, yeah. So because price isn't breaking out of here, it's just consolidating. Any move above here, I'd be long.
And I do have your first weekly fair value gap is at 68, right?
Yeah, 68, yeah.
Okay, so if it breaks out that range, okay, that's honestly.
If it breaks out that range, and you target in there.
And I think is this the 20? My 20. I'm looking on my phone. Yeah, my 20. So that probably would reject right there at that 20.
Which is the top of that box, in fact. You see? The top of that box falls in line with the top of mine's a 21, but yeah, 20, 21.
Okay. Yeah. But if we just get a little bullish push, that actually might be a good thing to, if it can get out of that range before it goes back down or finishes continuing down, let me say.
Because if you go to the daily chart, it's just been whipsawing up and down, up and down, up and down, you see. So you would probably assume that it's going to come up to this point here, which is the top of the weekly boxes. See that?
And take them out.
Down in itself. Yeah.
Yeah, I've been watching it a couple of weeks. It wasn't playing. It was making some great moves though. Yeah, I still like W. You can actually play that intraday both ways. So.
Yeah, definitely. I mean, let's see if there's any more of these ones.
May I ask you guys a question?
Sure.
What exactly is a fair value gap? Clearly it's a gap, but I've only looked at it briefly, like probably weeks ago, and never really touched it again. So I'm really not, like, I'm trying to follow along with you guys, but since I don't really know what it is.
Really. I've touched on it before, but I'll go over it again. So you're looking at a candle where prices move too fast between the previous candle and the candle that comes after it. So if you look at snow on the weekly chart, you've got the high of this two down, and then that particular week, price shoots all the way up, and it creates a fair value gap because the low of this candle is between the high of this candle, and that's your fair value gap where the box is showing you. And all a fair value gap is where prices move up or down too fast, and those with pending buy or sell orders haven't had a chance to get filled. So we can use it as a magnet for price to retrace or retract to, knowing that there's still orders waiting to be filled.
Got you. Okay, that does make sense. Thank you.
And we mentioned the indicator. If you want the name of the indicator, you can get it so it automatically shows you value gaps without you having to find them on your own.
Okay, perfect. Did you is it like in the chat somewhere or?
It's on. We mentioned it earlier, but
we're actually recording this, Shay. So I will be posting a video so that everybody can see it later, where he did explain it, and he even showed it on the screen and showed his settings and all of that. So yeah, it's all being recorded so that everybody, because we know this was last minute.
Okay, perfect. Thank you. This was my first one, so I didn't know. Thank you.
Of course, you're welcome.
Shay, this is what the indicator is called. So it's ANCHE /FVG, and this is basically the indicator on TradingView.
Gotcha. Thank you so much. Appreciate it.
Okay, no worries. Lala, anything else?
Nope. You can do the analyze tab now. For Thinkorswim.
So let's just say we put in FSLR because this is the one that I missed out on last week. In fact,
can you
let's go to Snow.
I'm gonna have to edit that, but can you like log out of your account or
I mean, this is it's just a practice account anyway, so it's
Oh,
fine. It's not.
okay, good.
Cool.
Okay, never mind.
Yeah, it's fine. It's cool. So, I mean, like I said, this is a practice account. Just because in the UK we don't have access to
Thinkorswim, that's right. That's right.
So
okay. I was just automatically like, wait a minute.
yeah, it's fine. Don't worry about it. So let's go on to, let's say, for example, snow. Let's say you wanted to pick the 150 strike price. Yeah.
Mhm.
If you did want to pick this for whatever reason, let's give it okay. So the 150 strike price, 5.6. What you want to do to analyze your potential profit is you right click on the ask, and then you click on analyze here, I trade, and then you go to single if you're playing a single, if it's a vertical or a spread.
Oh.
Yeah, so whatever you're playing, you pick whatever option you're doing. Okay?
Even
so
covered calls.
Yeah.
I love it.
Yeah.
Okay.
So just for this example, let's say we're doing a single play, and what then you can do it shows you the price potential at expiry as well as the day to day or any other given day. So let's say, for example, it's the 31st today, yeah? So let's say we want to see what price may be on the 3rd. So let's click the 3rd. Okay, so if price gets to, if price gets to 160 at the 3rd, if you come on, so the numbers at the bottom give you the strike price, or the price where you expect the stock to move to.
Okay.
And if price gets to 160, and see how I'm scrolling my cursor on the numbers moving here? Yeah.
Okay.
So let's say we say 160, which is there, give or take. So that's saying you would have on 10 contracts, $5,440 and 95 cents worth of profit. Now, let's take this down to say 2 contracts. You can see how the chart adjusts itself. So again, if we go to 160, now it's only saying I'll have 1,077, is it? $1,077.16. But that's by the 3rd, you see. So let's say you wanted to do your full weekly expiry, and then we did it to the 7th. You'd be negative by that point.
Well, it was a 5th contract. To try the August 5th.
August 5th, okay. So yeah, that was August 5th, yeah. Oh, sorry, my bad.
No, you're good.
So August 5th. Yeah, so if price reaches 160 by that point, you'd have $900.
Okay.
Yeah.
Okay.
So what you can do with this is, if you've got 2 tickers that are similar and you like, you can see which one's going to give you the most bang for your buck, so to speak.
Right. And I love how you can use Strat targets for that.
Exactly, yeah. So the key things with this is you can change your kind of leg that you're playing. You can do singles, butterflies, credit, debit, whatever it may be. Eyes or puts. You can change your quantity. I mean, let's say, for example, you didn't want the 150 strike call. You can change it to 152.5 and the chart adjusts. Yeah. Let's say you wanted to do a bid or ask price, that will adjust it as well. So yeah, you can play around with it, and then you can see your potential profit. So let's look at, because I really like this chart for next week, let's look at the D-Dog.
Okay.
So we've got weekly 2 down, but it's a hammer. Yeah?
Love it.
So if price opens up here and we're targeting a high risk candle, is 106.21. So let's go back onto the Analyze tab. Okay, so I'm going to do it 2 weeks out, for example. So 106 strike here. Strike, right click, buy, sorry, analyze, buy trade, single, and let's say we said, again, just for example, by the third, we said 106.21. Potential profit is around 1,200.
Okay, so that's a double.
Yeah. Say that again.
That's a double, because it was about
Yeah.
600, so it's 100%.
Yeah. So, and let's just use 2 contracts just for about $240 if you use 2 contracts.
Okay.
So not bad. Not bad in the space of a week.
So okay, so what is the purple line?
So the purple line is the purple line is the date that you've put in this bit here. Your date, your potential profit as of that date. So if I change it to the 4th of August, that line changes, you see. And the blue line is the expiry line, I believe.
Oh. Okay.
So the 12th, yeah, so anything after the 12th of August, then it obviously expires.
Oh, that's right, because you had the 12th. Okay.
Yeah. So this line dictates the date you put in here. And as you can see, it gets closer and closer and closer to that blue line the further you get to it.
Oh, okay.
Yeah. And can you see these 2 red lines, which is like your window? Your window obviously gets smaller in terms of how much profit you obviously get. Yeah.
So it even kind of gives you like, I want this to do this within this amount of time for maximum profit. I kind of like that. And you can use ATR combined with the Strat for that as well.
Yeah. Now, going back to DDOG, I mean, I've got this indicator on my screen. I don't know if you've seen it before, but it tells you the weekly ATR and the daily. So it changes no matter what time frame you're on. So it'll give you a monthly ATR, the weekly, the daily. And it changes colour. So it starts with being green, and then the closer it gets to its, for example, daily ATR, it'll start to turn orange. 74% near its ATR, and then when it gets too close or it's nearly at its ATR, it turns red. So that's how you can gauge the ATR as well when you're figuring how much a stock can move. So for this example with DDOG, its average true range is 19.22, and we're only at 102 now. So even if you wanted to say be super conservative and say, right, the only thing that's going to move 15, you put 15 onto that, so it takes you to 117, which is much higher than the 106 target.
Got it.
Yeah, I mean, if that's the case, you should be targeting up here, like the higher fist candle, which is your 116s. That's how much DDOG can move in a week, as you can see these big candles. So, if you taking that into account, you could, in theory, go back to this and say, you know what, I'm going to get the 116.
That would be me.
Price. But it's obviously more risky. But
yes, it definitely is. But DDOG being that expensive, yes, I would probably play a little further out contracts.
Yeah.
Just a little.
I mean, you could go and say, again, depending on the volume and the open interest, you could say, right, I'll get the 108. That's kind of in between where I'm at and where I want to be. So you could pay it there, and you can see it there if you.
Can you go back to all? Because I thought I saw a little more volume on the other one. The all strikes.
All strikes.
Yeah. And down to the Okay, no, I didn't. It's a lot. Well, open interest in volume is kind of bad, but the 110s don't look that bad.
Yeah, it's not kind of got the open interest in volume that you want. But again, just to kind of maximize your money, you could say, okay, if I go on a weight, and you want to analyze that again, it was 106.21, wasn't it? So if it was to reach, let's just use 5 contract for example. So 106.21 by 7. Maybe what's up here? What strike price is it picked here? Not for focus.
So okay.
Okay, so sorry. So if it was to reach your 108 or higher, then you can see if it gets to its 117. Get a bit confused there. 117, which is up here. You've got $3,000 worth on 5 contracts.
Nice.
That coincides with what its ATI can move on that weekly. So just by picking a strike price further out, you can see that you can be getting great returns.
And allowing it to do its thing. I love it. I love it.
Any questions?
Good. No. Shay, do you have any questions?
No, I do not. I just I need to use the analyze tab. I've known about it, but yeah, just the way he just went through it, it kind of just opened my eyes. Like, you should probably do that.
Right.
So yeah, thank you.
Yes, thanks so much, Figo. But I actually have to run because I got a last minute Turo car rental that I have to get ready for. So, if it's not anything else, I guess we can wrap it up.
Yeah, cool. Yeah. Okay.
Well, thanks so much, Figo. I'm gonna talk to you a little bit later. Of course.
All right. Enjoy your day.
Thank you, guys.
Of course. You too.
You too. Bye-bye.
All right, bye.